Federal Treasurer Jim Chalmers warns on China as the new Reserve Bank governor wins over supporters. Woolies still leads the supermarket wars, but Aldi is catching up. And tumbling cocaine prices rob Colombian families of much-needed income. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Monday, the 17th of July, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have a cracker of an interview coming up. You're speaking with Michael Miller, the Executive Chair of News Corp Australia. Talk about a big job.
Yeah, a massive job, and we ask him about it. Talk all about the media, its relationship with the big tech companies and whether the balance between the two is right. We talk about the future of news, the relationship between news and other media outlets like the ABC. Very wide-ranging, very interesting, very generous with his time, Michael. It was a great chat.
Yeah, it's a really good interview. It's definitely worth a listen today. That one's coming up a little bit later on. The main story this morning, Sean, Treasurer Jim Chalmers has warned of worrying signs in China's economy and broader global uncertainty while talking up the attributes of incoming Reserve Bank Governor Michelle Bullock.
He was very busy yesterday, Jim Chalmers. He said the global slowdown, including a recession in Europe, is having big implications in Australia. Along with the impact of higher rates here, Chalmers expects the local economy to slow considerably. China, which buys about $150 billion worth of goods from us each year, is very much a focus for the government, Chalmers said. He added that some of the developments in China are being closely monitored. In fact, he said incredibly closely monitored. Obviously, they're worried about that. Economic growth figures are due for release this week in the world's second largest economy, but it's just interesting that Chalmers is focusing so much on what's happening in China.
Yeah, it certainly is. The other big talking point, as I mentioned, for the Treasurer over the weekend was the appointment of Michelle Bullock as the next Governor of the Reserve Bank.
She will take the job from Philip Lowe in September. There's been widespread support for Bullock along the lines of if the government wants to get rid of Phil Lowe, then Michelle Bullock is a pretty good choice. There's been a lot of focus around her inclusivity as a manager. I'm not sure that all former Reserve Bank governors would be put into that category, but obviously the government wants to change how the bank runs. We saw that in the review of a couple of months ago, and that seems to have helped Michelle Bullock get the job. Yesterday, Chalmers said the decision to not renew Lowe's contract wasn't about one person. He played up Bullock's fierce independence and the fact that she carries a lot of respect and regard. Now, as I mentioned on Friday afternoon, Bullock is an RBA veteran, having spent almost all of her working life in the central bank. She was promoted to Deputy Governor a little over a year ago when the then Deputy, Guy Debelle, surprised everyone by resigning and moving to Fortescue. The outgoing Governor, Phil Lowe, said that the decision was a first-rate appointment. Bullock said she was deeply honoured to get the gig. I'm just wondering, Michael, do you reckon that right now, this morning, Monday the 17th of July, is the most popular Michelle Bullock will ever be in the public's eye?
No, I reckon when interest rates start to come back down.
Perhaps.
And all of a sudden, and if that happens in a year or whenever it is, that she will look like the one that is responsible for that.
Her timing is great because by September, the whole rate cycle should be turning, so we shouldn't be getting interest rate hikes. People will start talking about interest rate falls. So her timing's pretty good.
Yeah, absolutely. And it's worth a listen as well this morning to Fear and Greed the week ahead when obviously it comes out every Monday and you speak to our resident economist, Stephen Koukoulas, who's been pretty vocal over the last couple of years about the Reserve Bank, and just to hear his thoughts on the appointment of Michelle Bullock.
Yeah, absolutely. It's well worth a listen, that.
Now, how did local markets perform on Friday?
The S&P ASX 200 closed up almost 1% to 7,303 points, given the market hit a 3-month low less than a week ago. It's had a pretty good run. Since then, the ASX 200 is up more than 4%. That's all about confidence that there will be just one or maybe two more interest rate rises left in this cycle in Australia. Greater confidence that Chinese authorities will actually do something about their lagging economy, and hopes that inflation has peaked in the US. On Friday, tech stocks led the way while the telcos and materials companies did well also. The healthcare stocks were among the worst performers. Among the large caps, WiseTech Global was up 2.5%. REA and Xero were both up 1.8%. BHP, Fortescue Metals, Rio Tinto, they all did well, as did Telstra and National Australia Bank. On the other side of the ledger, CSL, Woolies and Transurban all went backwards on Friday.
Okay, and what about international markets over the weekend?
There was a major ruling in the US around cryptocurrencies. A New York court concluded that trading crypto tokens on a public exchange does not violate financial laws. But there was a kink in the ruling. Nothing better than a kink in a crypto ruling.
A little bit of kink in fear and greed. That's all we need, Sean. This is getting very, very erotic.
I was going to call it a Ripple, but funnily enough, the company involved in the court case is actually called Ripple Labs. So I was looking for a different word to Ripple, and I came up with kink.
And now you have so much regret, right?
Yeah, I should have thought ahead that you'd like that word.
Oh, yeah.
Anyway, there was a kink in the ruling whereby the issue of cryptos to sophisticated investors in 2013 by this group called Ripple Labs actually breached securities laws. That's what the ruling said. So initially, crypto supporters thought the ruling was a win. Bitcoin headed towards about $32,000 a unit. When the dust settled and they saw this kink in the ruling, and so the issue to sophisticated investors was breaching the law, then everyone sold off Bitcoin, and it ended at about $30,000 a unit. All in all, it ended not far from where it started, but I think there's probably a bit to play out on that.
That sounds like quite a confusing ruling.
Yeah,
if it prompts such a strong reaction from investors and then heads back the other way, then clearly it wasn't as clear cut as people were expecting.
Not a lot of clarity. Otherwise, US consumer sentiment figures hit a 2-year high over the weekend, though Wall Street ended the week flat. Oil came off a bit, but spiked during last week, and Brent is trading not far off $80 a barrel. We're seeing that at the petrol bowser at the moment. Gold is around $1,955 an ounce, and the Aussie dollar is buying 68.4 US cents. Go, you good thing.
Of course, we have to finish with self-interest. How long until you go away on holidays, Sean?
Michael, I'm pleased to say that I've got a couple of holidays. I'm going in about 3 weeks. I'm going for a week, and then I'm back for a week and away for another few weeks.
And we made a very special announcement on the weekend edition of Fear and Greed, didn't we?
We did. We've got the great Jennifer Duke coming in, and I was going to say stepping in. That's not right. She's doing more than replacing me. She's going to run the place for a while. Well, you and her, I suppose. I suppose you get a look in. But it's great to have Jennifer on board.
Yeah, she's a very, very well-respected business journalist. So we're very lucky to be working with her while you are away, and means we only have to listen to you going on about US dollars and currency exchanges and all these things for a couple more weeks.
I reckon you're going to hear a fair bit about euros soon.
Oh, what a coincidence. All right, we'll be back in a moment with the rest of the day's business news. Sean, the Fadden by-election on the Gold Coast over the weekend proved a solid victory for the Liberal National Party and demonstrated Labor's struggles in the Sunshine State.
While Labor didn't expect to win the seat, which was held by Stuart Robert with a more than 10% margin, the 2.5% two-party preferred swing against the government meant the Conservatives won back a bunch of voters that it lost at the federal election. Labor now holds just 5 of the 30 federal Queensland seats. Treasurer Jim Chalmers, who is the most senior Queensland Labor politician in Canberra, said the party needs to perform much better in the state. It's basically the first significant win for the coalition across the country, probably since the Tasmania election a couple of years ago. That was May 2021. So it was quite a moment for Peter Dutton.
Yeah, sure was. Now, Coles has narrowed the gap with Woolworths, but Woolies is still winning, Sean, according to a major survey of consumer goods suppliers compiled by analysts at UBS.
Yeah, so the research found that 41% of the 37 supermarket suppliers surveyed said Woolies had a better few last months, that's between April and June 30, compared to about 32% for Coles. But the investment bank's retail analyst said it's Aldi that's gained most market share. No supplier thought Metcash-owned IGA had done very well. According to UBS, Aldi's increasing market share is reflective of the higher cost of living and because it had lost significant share during the COVID-19 pandemic. So we have Woolies at number 1, Coles at number 2, and Aldi doing very well at number 3.
Well, it probably helps that Aldi has just had its big ski gear sale, hasn't it?
Yes, has it? I mean, I didn't realise that, but it is about the time of year that it should do.
Yeah, which is a massive, massive draw card for Aldi. The owner of one of New South Wales's biggest coal power stations has delayed its potential closure date by 4 years to 2033 as expectations mount that Origin Energy's huge Eraring plant will have to run for longer due to the slow transition to low-carbon energy.
Very interesting story. This, the new Czech owner of the 1,320 megawatt Vales Point generator on the New South Wales Central Coast, has advised the energy market operator that the technical life of the plant has been extended from the original date of 2029 as a result of a full assessment of the equipment. That's according to a report in the Financial Review. The decision comes amid escalating concerns about the ability of Australia's power system to maintain reliable and affordable electricity supplies as renewable power increases and as coal plants switch off. Vales Point and Eraring are two big coal plants in New South Wales that were originally due to close this decade. They could both now be kept running for longer, putting at risk the country's climate targets for 2030, including 82% renewable energy use and a 43% cut in carbon emissions. Now, a third coal plant, AGL Energy's Liddell plant in the Hunter Valley, closed in April this year. A decision on whether Origin needs to keep running Eraring beyond its current targeted closure of August 2025 is expected in the next few months. It's very much the pointy end of the debate here about going to greener energy and having enough energy.
Yeah, just the very base need to keep the lights on.
Exactly right.
Now, Sean, the Victorian government yesterday announced law changes forcing gaming machines to shut between 4 a.m. and 10 a.m, but Crown Melbourne received a carve-out.
Premier Daniel Andrews said the machines cause terrible harm and the rules are designed to reduce the damage. All 30,000 electronic gaming machines in Victoria will have mandatory pre-commitment limits in carded play, with load limits reduced from $1,000 to $100. New machines will also be forced to have a spin rate of 3 seconds per game, down from 2.1 seconds. Now, Crown Melbourne will have mandated pre-commitment and carded play on its 2,700 pokies by the end of this year, but it won't be affected by the restrictions on opening hours. Gamblers at the casino will need to prove their identity to get a card, set mandatory pre-commitment levels, which can't be reset for 24 hours, and take a 15-minute break after 3 hours of play. Gamblers lost $2.8 billion to pokies at pubs, clubs and hotels during the first 11 months of the last financial year in Victoria. So clearly something needs to be done.
Isn't it frightening that the government even needs to force machines to shut between 4 a.m. and 10 a.m? I just find that quite frightening.
Yes, I mean, I totally agree with you, but there are a lot of shift workers, people that work overnight and stuff like that probably do it as well. It's probably a bit more complex, I think, sometimes, the whole gaming argument, but certainly with $2.8 billion in 11 months, that's a lot of money people are losing.
Yeah, pretty confronting overall. Now, Sean, National Australia Bank has agreed to pay rises of up to 17.5% over 4 years and enshrined rights to work from home as part of a landmark union deal that could set the benchmark for the industry.
Yes, so the Finance Sector Union reached the in-principle agreement late last week for a 5% wage increase for workers earning less than $100,000 a year, followed by another 5% in 2024, 4% in 2025 and 3.5% in 2026, according to the Fin Review. All 25,000 employees, including senior managers, will also have rights to request to work from home and appeal unreasonable refusals in what is a first for the Big Four banks. The deal ends a tough week for bosses last week, particularly those who want staff back in the office. Federal public servants won the right to uncapped work from home days, and Commonwealth Bank staff revolted against an edict to return to the office.
All right. Now, one last one, Sean, before we get to international news. Colonial First State will pay $100 million into thousands of Australians' superannuation accounts to settle a class action alleging it illegally charged members high fees to help finance generous commissions for financial advisors.
The settlement, which came with no admission of liability or wrongdoing by Colonial First State, very important to point that out, but it will be the highest payout by plaintiff law firm Slater and Gordon in a class action if it's approved by a court. The action, which alleges Colonial First State pulled hundreds of millions of dollars from members' retirement savings to fund fees for no-service schemes, is the latest case linked to the Banking Royal Commission. The Commission handed down its final report back in 2019. The suit alleged Colonial First State, which is the Commonwealth Bank's wealth management arm, unconscionably hiked excessive fees charged to existing members for its first choice superannuation fund to fund the advisors' commissions, including some who were linked to other bank subsidiaries. Slater and Gordon said that Colonial First State kept charging these fees despite having the power to reduce them or transfer those members onto identical products with lower fees and no commissions attached. New members to the fund were put on these cheaper products, but not those existing members. Anyway, there's no admission of guilt. We get that, but still $100 million payout is a lot of money.
All right, turning to international news now, Sean, and Ukraine is on the verge of achieving a major breakthrough as it pushes east on its counteroffensive. This is according to Estonia's intelligence chief.
So we don't really talk much about Estonia, but their intelligence chief certainly had something interesting to say over the weekend. Ukrainian pressure is beginning to weigh on Russia's demoralised front lines, and they could soon crack. That's according to Colonel Margot Grosberg, noting that troops had destroyed Russian command posts and made headway. According to a report in the Daily Telegraph of London, Grosberg also pointed to Russian generals' complaints about a lack of reserves to rotate out exhausted soldiers and increasing levels of dissent as evidence of the pressure. Now, last week, a Russian general was sacked for complaining while a cruise missile destroyed a Russian command post. Interestingly, Ukraine has been somewhat more cautious in its comments in recent days. It said its counteroffensive is going slower than expected, but clearly the Estonians think otherwise.
Yeah, it's an interesting one. Now, finally, Sean, a near 75% crash in the price of coca, which is the main ingredient in cocaine, is contributing to food insecurity in Colombia and causing displacement as people leave areas that depend on the illicit crop.
A slightly different take on it, Michael.
It is, isn't it?
Yeah. So an internal United Nations presentation seen by Reuters says that historically cocoa crops have provided better incomes than legal alternatives for thousands of rural Colombian families, in part because drug trafficking groups often pay the costs of transport, fertilizers, other supplies and things. But now buyers of Colombian cocaine are drying up. Oversupply of cocoa, including more productive plants and record crops, is contributing to the crash, along with slow growth of trafficking routes and new cocoa cultivation in Guatemala, Honduras, and Mexico. Other reasons for falling cocoa prices include territorial disputes between trafficking groups and imports of synthetic opioid fentanyl to the United States. The upshot of that is that there are a lot of displaced families in Colombia.
All right, now up next is a must-listen Fear and Greed business interview with Michael Miller, the Executive Chair of News Corp Australia.
Yes, we talked to him about what's going on at News Corp here, what's going on in the media industry here, how News Corp is getting along with the ABC, how they're getting along with social media, all sorts of things. A great chat.
Yeah, it really is a fantastic chat. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. News Corp Australia is a platinum partner of Mumbrella 360, which is taking place this week. That's Australia's leading media and marketing conference. It's happening at the Hilton Hotel in Sydney. There's 3 days of content across 2 levels of the hotel. You've got a bunch of international speakers flying in.
And you got some dodgy moderators too.
I was about to say, my highlight, the thing I am looking forward to most, there is going to be an absolutely cracking debate taking place all about agencies and the role and who does it best. But my part that I'm looking forward to most is the moderator, Fear and Greed's own Sean Aylmer.
Oh, yeah, they better be on their best behaviour. I'm happy to hit the mute button without any warning, Michael.
I suspect these agency types, though, could just talk over the
probably could.
So you may have to take a whip or something. Anyway, look, I'm looking forward to it. There are last-minute tickets on sale now. They are at mumbrella360.com.au. Check it out. It should be an absolutely fantastic few days this week. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 17th of July, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.